Growth stock investment remains one of the two most popular forms of investment, with the other being that of value stock investment. Abiding to this philosophy, investors tend to pick stocks of companies for their portfolios that they have ample reason to believe will grow at a pace far higher than that of the wider market. Because such companies are typically focused upon growing their revenues and earnings to sustain wider expansion in the market, they do not pay off dividends to its shareholders. Similarly, investors of such a nature are not interested in dividend payments, in order to ensure their investment amount is maximized fully. Earnings therefore are reinvested into the business in a manner that sustains further growth. Some of the most successful investors have built up their fortunes in the form of capital gains that they achieved by timely investments in some of the best growth stocks. Those looking to follow a similar path need not to look any further. In this video, we present some of the most promising growth stocks that are ideal to invest in right now, and would result in tremendous growth in the upcoming years and even decades. The first stock we present for this list is the African telecommunication and fintech company, Airtel Africa, which trades in the OTC as AAFRF. The developing world presents the most booming growth opportunity, given the transformation of certain regions that have historically been behind on core areas, and are fast catching up. Airtel Africa is one such company, which has 14 mobile networks operational across Africa, with Nigeria being its largest market. In addition to running highly lucrative mobile networks, the company also owns one of the most popular mobile payment and digital banking platform, Airtel Money, with over 26 million users. Airtel Africa has strategically positioned itself onto the two core growth drivers of Africa in a simultaneous manner, causing its growth potential to be staggering. Both these powerful domains are supported by powerful tailwinds, which include a surge in mobile banking across the African continent, as well as rapidly growing data usage and mobile penetration. This is even more impressive, considering that Africa lags behind in comparison to other developing regions, such as Latin America and Asia, which gives it catch-up opportunities and a tremendous growth runway. Based off these factors alone, Airtel Africa is an incredible growth stock to consider. In its most recent quarter, its earnings per share shot up over 30% on a year-on-year basis. Similarly, AAFRF is trading at under 12 times free cash flow, with a rising return on capital of over 20%. The second stock on our list is that of Palantir Technologies Inc, which trades under the ticker PLTR. Palantir is a software company, which develops applications that assist in detecting dataset patterns, as well as signals intelligence sources. For this reason, the company's prime clients have been global intelligence agencies. However, this appears to be changing significantly. The most impressive aspect about Palantir Technologies remains its phenomenal growth, despite the severe macroeconomic headwinds facing tech companies. In its most recent quarter, PLTR recorded a year-on-year revenue growth of a stellar 26%. On the surface, this figure alone seems highly compelling, but digging deeper we find much more to marvel at. For instance, revenue from its commercial segment alone, in its recent quarter rose by 46%, which indicates a surge in corporate clients. This boosts the company's financial sustainability tremendously, as it would no longer rely upon intelligence agencies to a critical degree. Moreover, the number of its customers in the US alone surged by a whopping 250%. For those chasing growth, these metrics are major green flags. They indicate that Palantir is focused on long-term business relations, sure to lead to revenue and earnings boosts in the future. From all the strong growth indicators, the cherry on top for Palantir is its attractive valuation. Although PLTR is a growth stock, it is trading at a price 70% below that of 12 months ago. This signals a strong buying opportunity for those looking to enjoy tremendous long-term growth. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list of high-growth stocks is the weapons company, Smith & Wesson Brands Inc., which also goes by SWBI. As far as firearm design, manufacture and sales go, Smith & Wesson is among the top names in the world. Even more impressive is the fact that it has incredible growth prospects, with some strong tailwinds in the short term. SWBI's recently reported quarterly results did not prove highly attractive, given that it saw a top-line decline of 43% and a bottom-line decline of over 50%. A large part of this poor performance had been due to inventory management problems, following the extraordinary demand surge following COVID-19. Now that the company faces a new inventory cycle this quarter, it is on track to continuing its stellar growth trajectory. Last year in 2021, SWBI doubled its annual revenue from $529 million to $1.06 billion. With demand levels at an even higher point than last year, this could be further surpassed by next year. Similarly, Smith & Wesson is supported by a number of strong tailwinds that further push its growth prospects to new heights. The most significant is that of cooling inflation levels, which many economists strongly anticipate, which would cause a demand surge by customers. Moreover, the US midterm elections would prove as a major trigger point, which is expected to catalyze explosive demand for firearms in the US market. The stock is clearly a treasure pot, ready to burst soon. Next up, we take a look at Pentair PLC, a water solutions company which trades by PNR. Pentair could best be described as a flow technology company, with two prime segments that collectively deliver up to $4 billion in annual revenue. Its consumer solutions segment primarily includes swimming pool-related products such as pumps, heaters and filtration systems. On this B2C segment, Pentair holds a leadership position throughout the North American market. Similarly, its industrial segment lays focus upon products such as membrane filtration, separation systems for factories, as well as bioreactors. Despite its large scale of operations and robust market position as leader, Pentair continues to boast high growth in performance. In its June 2022 quarter, the company reported top and bottom line growth of 13% and 16% respectively. Both analyst consensus and the management's guidance suggest this double-digit growth trend is likely to continue throughout the upcoming years. This is mainly due to strong demand trends in the industry, which Pentair, a market leader with an extremely strong product portfolio, is well suited to meet. Its position in the market also allows the company to absorb inflationary pressures and transmit the burden to its consumers. This is all strengthened by a terrific backlog and a highly sustainable business model. Pentair PLC is a star growth stock to consider. The final stock on today's list is Latham Group Inc., a swimming pool manufacturer, designer and marketer, which holds the ticker SWIM. The company's market scope covers North America and the Australia and New Zealand zones. One typically does not think of a swimming pool company when exploring high-growth stocks. Latham Group, however, is a clear exception for a number of reasons. For one, the company has defied the conventional B2B norms of the industry by directly servicing homeowners through an enhanced focus upon digital and social media marketing. Similarly, its transition towards fiberglass swimming pool gives it tremendous marketing edge and a high growth runway, given the low adoption rates of this superior pool class. Latham's high growth trajectory can be traced back to 2019, when it had acquired Narellan, which was at the time the largest fiberglass pool manufacturer in Australia. Ever since, the company has been dominating the market with its enhanced fiberglass product offerings, which entails simpler and low-cost installation, higher quality pools that are far more aesthetically pleasing in nature. Revenue grew by 27% in 2020, and a staggering 57% in 2021. Furthermore, Latham's business model stands as being highly robust and sustainable, especially when considering its recurring customers that regularly purchase high-margin pool products related to maintenance, design and other aspects. Given all these core strengths, Latham Group is a great steady riser to pick when seeking growth. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well suited for long-term growth. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.